Have you ever wondered if the absolute secret to building wealth in Zambia is hiding right in plain sight? I know, for a lot of students and young professionals, the whole idea of massive wealth generation feels, well, disconnected from everyday life, right? Like it's some closed-door club. But what if the actual engine driving Zambian economic growth is something you can access literally today?
Welcome to this explainer. Today, we are unlocking the Lusaka Securities Exchange, or the LuSE. Now, you might picture the stock market as this elite, super complicated space meant only for wealthy institutions. But the reality? It's completely different. The LuSE is a highly accessible marketplace built for everyone. And yes, that absolutely includes Zambian students checking market dashboards right on their smartphones. We're going to break down exactly how this market works and how you can get in on the action.
Okay, let's dive into this. Here is our roadmap. First, we'll go inside the LuSE market. Second, we'll look at the 50 shareholder trigger. Third, the path to listing. Fourth, some real Zambian case studies. And finally, number 5, those sweet investor tax advantages.
Starting with Section 1, inside the LuSE market.
To get how this all works, we first need to understand how the exchange is actually built. It isn't just one massive bucket of companies. It operates on a two-tier system. On one side, we've got the main board, or the official list. This is for the heavy hitters, the large, mature companies. To be here, a company needs a minimum of 25% of their shares available to the public as a free float. But on the flip side, we have the Alt-M, the alternative market. This one is specifically tailored for growth stage SMEs, requiring just a 10% minimum public free float. And this brilliantly illustrates how that lower barrier makes the market so much more accessible for ambitious, fast-growing Zambian companies that need to raise capital.
So, as a self-regulatory organization established back in 1994, the LuSE makes and enforces its own listing rules. But it does all of this under the watchful eye of the Securities and Exchange Commission, SEC Zambia. What's fantastic about this setup is that it creates a structured, trustworthy vehicle that empowers local companies to access much-needed capital, whether they're industry giants hitting the main board or smaller tech startups finding their footing over on the Alt-M.
Moving to Section 2, the 50 shareholder trigger.
Now, before a company even decides they want to ring the bell on the exchange, there is an exact moment when a fast-growing SME suddenly steps into the regulatory spotlight. And that moment is triggered by one very specific critical number: 50. Under Zambian law, the absolute second a company hits 50 shareholders, it is automatically classified as a public company. Boom. Just like that. This triggers a mandatory requirement to register its shares with the SEC. What's kind of crazy here is that a lot of fast-growing SMEs cross this threshold completely by accident without even realizing it. Maybe they bring on a couple of angel investors, hand out some shares to early employees, and before they know it, they're pulled right into the SEC's orbit. It acts as a major catalyst, pushing them toward the formal markets.
Which brings us to Section 3, the path to listing.
So, the crucial point is, once a company is in that regulatory spotlight, how do they actually make it to the exchange? Well, it is a pretty rigorous 7-step process. First off, no listing is happening without a LuSE licensed sponsoring broker. These guys are absolutely vital. They do the due diligence, structure the offer, and set the share price. Next up, the company has to show 3 years of audited financials with totally clean opinions. Then they need a 2-year forward business plan laying out all the projections and risks. After implementing some formal governance and insider trading policies, they choose their offer type. From there, the SEC and LuSE thoroughly review the prospectus, and once approved, the public offer opens, shares are allotted, and trading finally kicks off.
Let's look at Section 4, real Zambian case studies. Let's put some faces to these concepts and compare two totally different strategies used in the real Zambian economy. On one hand, we have .com Zambia, a tech company that joined the Alt-Me via a traditional IPO, an offer for subscription. This means they actually issued brand new shares, pumping fresh capital straight into their balance sheet to fund growth. Contrast that with Clapton Reinsurance on the main board. They went with a direct listing. So in a direct listing, no new shares are issued, which means no new capital is raised. Their existing shares just simply start trading on the open market. Now, .com Zambia's story, it's incredibly inspiring. Founded back in 2009, they became the very first 100% Zambian-owned tech company to go public through an IPO on the Alt-Mem. They've been a powerhouse in government digitalization contracts, doing things like the e-fuel and e-pass platforms. And get this, they posted revenues showing a massive 147% year-on-year growth. I mean, wow, this is exactly the kind of local tech success story the Alt-Mem was built to nurture.
And how did the market react?
phenomenally. Zambia's IPO was 114% oversubscribed. Think about that. Investors applied for more than double the amount of shares that were actually available. This proves, for sure, that the Zambian capital market is active, it's vibrant, and local retail investors are incredibly hungry to get in on local success stories.
And finally, Section 5, Investor Tax Advantages.
If seeing 147% revenue growth wasn't enough to grab your attention, now what's really interesting about this is the massive structural advantage waiting for retail investors: zero capital gains tax. Literally zero. In Zambia, if you buy shares in a LuSE-listed company and sell them later for a profit, you pay no tax on that capital gain. This is an absolutely huge benefit, especially when you compare it to building wealth through property or regular business income, which get heavily taxed. The government actively wants you investing here.
And you know, those incentives don't stop at equities. Let's talk about green bonds. These are debt instruments issued specifically to fund environmental projects. For example, the Copperbelt Energy Corporation, or CEC, recently issued this massive green bond for their ITP solar project, raising over $150 million. To really encourage this kind of environmentally friendly investing, Zambia applies zero withholding tax on the interest earned from LuSE-listed green bonds. So you're looking at tax-free, impactful investing right here at home.
We've seen how the LuSE opens its doors to fresh tech startups, how it structures safety for investors, and honestly, the immense tax advantages waiting for those who jump in. The Lusaka Securities Exchange isn't some closed-off VIP club, it's a launch pad. So I'm going to leave you with this question. As you look at the vibrant future of the Zambian economy, will you be the entrepreneur ringing the bell to list your own company, or will you be the savvy investor building tax-free wealth by buying those shares? The choice is entirely yours. Keep learning, keep investing, and I'll catch you in the next explainer.